now. The RBI is beginning its bi-monthly policy meeting and has already begun it to review and decide on the country's benchmark interest rates, commonly referred to as repo rates. Now, this will be the first monetary policy review for the financial year 25-26 with the outcomes specifically regarding lending rates. According to Bloomberg, a poll of economists forecasts a 25 basis point cut rates at the meeting. My colleague Pallavi now joining us with more details on this. Pallavi, over to you.
Right. The RBI's MPC is expected to continue to cut the benchmark lending rate. It currently stands at 6.25%. And the consensus, like you mentioned, according to Bloomberg Economists poll, is that we are likely to see another 25 basis points cut, bringing the benchmark lending rate to 6%. However, while that's the consensus, given the inflation growth trade-off and the global sort of economic background, economists are not ruling out a deeper rate cut, possibly of 35 basis points or even more than that. But let's remember that the consensus, again, remains that of a 25 basis points rate cut. Now, like you said, this is the first policy in the current financial year. And of course, more importantly, it is also the first policy meet post the announcement of retaliatory tariffs by US President Donald Trump at 27%. What else has changed from the last policy to this one? Let's take a very quick look. Domestically, CPI inflation has moderated to 3.61% in February. That's from about 4.3% we had seen in the month before that. And more importantly, even for the month of March, inflation is estimated to come below the 4% MPC target. GDP growth, meanwhile, did see some uptick in Q3, improving to 6.2%. But high-frequency indicators have shown sort of a mixed performance for Q4 as well. More importantly, post that, we have seen numerous developments on the tariff fronts, which means that downside risks to GDP growth persist domestically, but also in terms of indirect impact, which we can see if global growth slows and if the US is to go into recession. Meanwhile, bond yields have eased in anticipation again of the rate cut. What we're going to be watching out for predominantly from the policy meet is whether the RBI chooses to change its stance from neutral to accommodative. We've already seen the RBI inject liquidity on multiple occasions prior to this policy meet. We're also going to be watching out for any changes in terms of the growth or inflation forecasts.